The hedgeless horseman here, it's April the 22nd. Well, it's technically the 23rd already in Sweden. First of all, thanks to the sponsors. Let's look at markets. Of course, bloodbath today in most metals except copper. Copper actually ended up, I'm pretty sure, which was very interesting because, like I think I've said before, that in the short term, I've been most excited about gold and silver. But then again, I mean, gold and silver have actually gone up a lot in the short term, so I guess that looks right. And long term, I would agree with a lot of other people that copper has, the supply-demand fundamentals, which makes it very attractive. And I would say that also goes for nickel. And I mean, it's different when you look at metals that are actually consumed, not like gold and silver, which is, I mean, almost all the gold that's ever been mined is above ground somewhere. So the supply is still there. It's just 3% addition to the supply every year from mine output. But copper and nickel, I mean, that gets consumed along with a lot of other metals. So it's more of a special situation. Still, I mean, this just goes to show. It's like I literally have no idea what metals are gonna do what in the short term. It's like, okay, nickel has been left for dead, but it's like I've been pointing out that we've seen mine closures in nickel. We've seen headlines that's like talking about the bloodbath in the nickel space, and you see companies going bankrupt, and you see whatever. But that's what you typically see near a bottom. It's like supplies getting taken off the market, which is great for the future price. And of course, like Rick Rule said a bunch of times, nickel in Indonesia, I mean, that can't go on forever either. And I think that's partly why you see such, so large companies as Samsung and Sumitomo, and I mean, even what I think it was Agnico Eagle that put in some money in Canada Nickel. So I mean, the big boys, not only the mining companies, but the OEMs, they're actually investing in nickel mines in North America. They have to first of all see beyond the next 5-10 years, and of course, given the ramping thresholds, like made in America for EV cars, or made in North America, I should say, they, I think it's as soon as 2026, and that's, I mean, 1.5 years from now, that the threshold for what needs to be in how much domestic, domestic input into EVs or batteries or EV cars, whatever it is, it gets hiked up a lot. So I mean, that's relatively soon. And again, long-term, Indonesia obviously won't be around forever to produce the quantities they do, and now they control like 60%. So imagine if you picked up a cheap nickel project today, and fast forward 5-10 years, and maybe Indonesia is ramping down, and yeah, I mean, maybe it could be worth a lot. And I mean, to wait 5-10 years to get 1,000% return, I mean, that's literally a superb result. Anyway, that's a bit off topic. Gold, silver, yeah, down. I mean, it seems to be, I don't know, flattening out for now at least. But my point is, like I made in the previous video, I don't try to predict this stuff. I couldn't tell you what metal is gonna do well at any point in time. My emphasis is on I don't want to be exactly wrong. If I put all my money into one stock, I need to be exactly right, or I should say look exactly right. Because the outcome and a good case, a positive outcome is not necessarily from a good case, or a good case doesn't necessarily lead to a positive outcome. I made money in crap stocks. I've lost money in what I think are good cases that simply didn't turn out the way I thought they would. That's why we don't put all our eggs in one basket, and I think that goes for metals as well, because like I wrote in the, I think, Magna forum today, I mean, as soon as I see copper go up and gold and silver go down, I get stressed and like, oh, right, now the supply shortage is coming in copper, and we knew this all along. I'm late to the party. I need to, put all my money into copper stocks or whatever. And the next day you see copper go down on some headline, could be whatever. It's like geopolitical tensions, a bank just went bankrupt, China did that, the US did this, and that completely flips, and all of a sudden I feel, then I go to the say to myself that, all right, I mean, I always thought gold and silver would shine before we reached, the utopia of the green evolution or green revolution, and that again, it's like, you see headlines with recession fears go up. That doesn't make you want to buy copper or nickel, etc. Even knowing that, hey, the supply demand picture is favorable long term. But again, as investors, we react to what we see in the now. That's just how it is. The trick is, I mean, in my opinion, is simply not to follow that or not get affected by it. And that's why I like having a bit of everything. I would say I have an emphasis on gold and silver, but I own, copper. I'm a big pull on copper, zinc, nickel, silver, gold, whatever. Really, I mean, there's a lot of metals where it's like, hey, we're not permitting or putting up enough mines into production to fill the supply gap that looks to be coming. We might have a big recession in between, or a global recession or a depression, whatever. I mean, the long-term picture doesn't really change. Obviously, if copper or nickel prices, for example, dropped even more, I guess nickel is down a lot more than copper, but let's say, 30% dip in nickel and copper, is that going to bring new mine supply on? No. So it's just going to push forward the, let's say, inevitable bull. Maybe even make that next bull even stronger. So I mean, in a 10-year perspective, if you found 20 good copper stocks to own, you probably make money, maybe a lot of money. Maybe the copper price in 10 years is, I don't know, $12 per pound or something, and you're up 1,000%. But in the meantime, you might have a 50% correction or a 30% correction, or not much of a correction, and we're actually around the bottom, or the bottom is in. It's like, I don't know. I have no idea. That's why I like to own a bit of everything, because that kind of, again, it's like you're your own worst enemy. So I do everything I can to try to limit myself from making mistakes, emotional mistakes, because even though I try to harp on, about common sense, long-term horizon, discipline, patience. I mean, I'm only human as well. So it's like I know how I react to stuff. So it's like I'm learning about myself from my experiences in the market. How did I react to this? What kind of makes me anxious, etc. And then I try to either work through that or, try to parry it some way. And one way I do it is that, okay, I own, some of several metals. So if nickel does well, I know it's like, oh, nice. I'm sure glad I own Magna and Stillwater Critical Minerals and a bit of, Fathom Nickel and Nikan and stuff like that. But if copper does well, it's like, ooh, I hope inflection hits something. And maybe Pacific Ridge and Brixton make a discovery. Obviously, pretty much all of them are more alpha stories. I mean, they're more discovery driven. They don't actually have a a working deposit yet. So there's more layers to it. But obviously, if copper is doing well, whatever, if they discover something that's going to go up in value, so like implied, you have exposure to copper anyway. And I mean, gold and silver, I own a bunch of stuff. So it doesn't feel like I'm missing out on anything, and it makes me have a much easier time just hodling. It's like today, even though we had again this violent day with like silver down 5.6%, I think gold was down 3%. I think I did one trade for $200 because that was just a position I had to keep an eye on a stock. So I only had like a watch list position, and I sold that and thought I would maybe add to something. But it's like basically 0.00001% of my portfolio got traded today. So in practice, I did no trading today, which is how it's supposed to be. It's like I think there's like, depending on what if you're a day trader or a swing trader or whatever, it's like that's a completely different thing. But if you're an actual, let's say, investor and you play the big money, the big moves, long-term moves, obviously you shouldn't be trading that much because the long-term is not within a day. Anyway, let's look at some news. So we got this from Red Pine today. Michael Michaud to join Red Pine as its president and CEO and as a member of its board of directors. So it's like we can actually check here to see if. Okay, now they have a new presentation. That was the interesting thing. They actually had for a while there, for a few days, it just said presentation pending or something like that. So I think. Oh yeah, and here's the new guy. That kind of, I'm not gonna say tip the hat, but it's like, okay, you could tell that Red Pine thinks the next news release is probably somewhat of a big deal, that they don't even bother to have up a preliminary presentation. And I had never heard of Michael Michaud, but I'm happier when I read about him, because apparently they sniped him from Wesdome Gold Mines. Wesdome Gold Mines, I think they have done. Yeah, you can see. Okay, it's actually down from whatever. It's like $1.5 billion. Wesdome has been one of the success stories. I remember when I bought Wesdome for the first time. I think it was at 200 million or something. Way back now, of course, and I don't own any shares anymore. The signal value that they Wesdome is doing well. He was probably pretty high paid at that job, and it's like to get him on board with Red Pine like this. Not that he retired or he was out of work or anything. No, they actually got him to jump ship from Wesdome to come be the CEO of Red Pine. So I would think he would need to see something relatively special, or at least relative to the current market cap of Red Pine. And as it says here, Mr. Michaud has served as SVP Exploration and Resources at Wesdome Gold Mine since 2017, and before that served as IAMGOLD Corporation's Chief Geologist, responsible for providing global geological support to IAMGOLD's exploration activities worldwide. Served as Vice President Exploration for St. Andrews Goldfields. I remember I owned St. Andrews Goldfields before it was acquired by Kirkland Lake, I think, and as a principal of SRK Consulting. So this was a success. Canada Gold. Wesdome is a success. Canadian Gold. IAMGOLD, I'm not 100% sure. I think they're a multinational company, but that's a big company. So this guy is, this guy is a big gun. He's part of a success. He was part of this success, and he was chief geologist for IM Gold, which is not a small player. So you don't put a guy like that as chief geologist if he's bad, and I don't think he would be working for Westdome if he was bad. So I take that as great signal value, that they're actually somebody's putting his reputation, which looks very nice, behind Red Pine. We are extremely pleased to have attracted someone of Mr. Michaud's caliber to lead Red Pine during the next phase of the company's progression. Michael has an extensive background in resource development as well as relevant corporate experience. Relevant corporate. I see Red Pine as a takeover candidate, so it might be what this is hinting at. And the board looks forward to working with him. His endorsement of Red Pine, and that's why I think we ended up, green today, even on a bloodbath day in the metals, is a strong statement on the future potential of the Vava Gold project and our goal of expanding the resource on our large, relatively underexplored claim block located in a very active gold district in Western Ontario. Mr. Michaud commented, "I'm very pleased to be leading the Red Pine team. Exploration success over the past several years has not only identified high-grade mineralization outside of the previously mined zones, but has also confirmed the potential to host a sizable gold deposit near surface. It is an exciting time for Red Pine to now capitalize on this significant potential, and I am eager to be part of the advancement of this property." I think again this is good for from a signal value perspective, because there's a lot of people that just look at the share price, and I think recently there's shares free trading, etc. So anybody who was locked up and had to rebalance their portfolio or whatever reason, they couldn't sell, but now they could sell. So it's like, it's a temporary lid on the stock, and that doesn't get people excited, because people only want to buy stuff that's going up in price, not going down in price and becoming cheaper. But I think this is like a stamp of approval that yes, Red Pine is for real. The Wawa Gold project has merits, and it might get even better. So. Oh, and I want to touch on this, even though maybe I should have gone the other way around. Oh, I think someone asked me about copper juniors. Well, someone asked me on Twitter at least. And I find... I'm mostly a gold and silver guy, as most of you probably know. As most of you probably know. And I think I know my limits, like, I'm thinking like circle of competence. I find the copper business to be a lot harder than the gold and silver business. In the gold and silver business, a junior could theoretically put something into production, and you don't need to necessarily be acquired to have value. That's unlike, let's say, a trading sardine, where it's like, okay, you think that a junior has no shot of building it, it's not a good project, and nobody's going to buy it, then you have no way really to monetize the value. So the fact of the resources in the ground are worth zero. And when it comes to copper exploration, I see copper resources here and there. It's like everybody seems to have a copper porphyry target. Even though it's like most of the time highly theoretical, but it is expensive to drill for copper porphyry. Typically they are relatively deep, because the shallow ones get found first, obviously, and if they are shallow and haven't been found, they might be in a remote place. So a lot of stuff like that goes into it. So it's not really junior resource friendly, especially in a sour market where capital is hard to get by. And again, I'm not a porphyry expert. I have a sense of, do I think a gold deposit could work or not? But when it comes to copper exploration, it's like, okay, what size is required? And again, most of the time it's like the capex is, maybe a billion plus at least. So the threshold for success is kind of high, and I don't really know what to what to look for, and some copper projects works in some grade works in one jurisdiction, it doesn't work in the other jurisdiction, whatever. So the less I know about a commodity, the geology, the mining involved, what you need to see, etc., the more I go down to people. I mean, I think that is an obvious thing, but I guess a lot of people miss that, let's say, tool. And I mean, I did a post, I think I did a post or a video maybe some time ago, but it's like how to foolproof your portfolio. And the point of that video or article was simply like to point out that you don't need to know everything. You can just, if you follow, if you only buy stories with like third party validation, it's hard to go wrong. And that's not meaning that you're gonna make money on every single one of those. It's just that at least they have a legit shot of having something that could become something significant. So that's why, like, Inflection Resources, I mean, they have the most stacked team I have ever seen. And it just got more stacked with the addition of Neil Adshed, and I don't remember the guy, but he was ex-head of global exploration for Newcrest. It's just an amazing team. Do I need to know about porphyries? Do I need to know what majors want? Do I need to know what makes a mine? No, I don't. I know that insiders own like 28% of the company, and they have some of the most impressive names in the porphyry exploration space who put their stamp of approval on it, and and are somewhat putting their reputation on the line. Plus, you have Anglo Gold, who early on said, we like your land package, we like what you're doing here, we're giving you a pretty amazing, earning deal. I don't need to know more, especially if I mean, the price is the most important, I guess. It's like, okay, look at price, 20 million CAD, how much of, is that pricing in over optimistic chance of success that they will find something that these guys would want to find and that Anglo Gold would want to mine? I don't think so. I think it's pricing in almost, let's say, 1-3% chance of finding something of significance, and I think that's too low. But that's just me, of course. But my point is that, like, those people, and including Anglo Gold, wouldn't get out of bed if they thought there was no chance in hell, and it's kind of priced like no chance in hell. Brixton Metals has BHP and Ivanhoe Mines on two different projects. Or am I smarter than BHP or Ivanhoe Mines? Nope. Is there a guaranteed discovery? No, but BHP has the highest threshold of any miner when it comes to what value they need to see. They might need to, I mean, we're talking mega deposits that they would go for. Is there a guarantee that Brixton is gonna drill up a mega deposit at Camp Creek? No. But obviously, if they would end up doing that, the current market cap is orders of magnitude away from something that BHP is looking for. So again, chance of success, I don't know. Let's say, I mean, that might be optimistic. Let's say 20%. 20% of 1 billion, and that's still not enough for BHP, I don't think. That's 200 million, etc. KDK Copper. That's been on my radar for quite some time. It was quite hot, was it like 2 years ago or something? I never bought it, but I saw a lot of people buy it, and it was talked about a lot. And yeah, fairly hot, and I know that tech is involved. Well, I recently talked to the company, and I think this is a legit play, but it's also quite easy to say that because tech has been backing them. Tech has a market cap of 33 billion. Their project is in Canada. They already have a discovery. They have a bunch of other targets. Canada seems to be where a lot of the majors want to focus in on. Tech are smart. I mean, you get the point. I think the market cap is like 45 million CAD. So again, it just comes down to like, what price am I paying? Or am I paying a price that suggests that there's like got to be a 50% chance that Kodiak ends up, making a discovery or two more, and that actually becomes like a, porphyry camp that Tech or someone would mine. No, at 45 million, it's pricing in that, I don't know. I mean, they almost have nothing. I mean, it's certainly not something that Tech would be interested in. So again, at the end of the day, it comes down to price, and if Tech is interested, it's hard to go wrong. North Isle Gold and Copper, a lot of people have thrown this name at me. I don't own that. But Michael Gentile is in. I don't know if anyone, there's more third-party validation than that. Still, I mean, he's a sharp investor, so it's like if he's involved, I mean, there's above a chance in hell that it is something. Condor Resources, and in this case, I mean, I think they have more than one copper target, but I'm thinking of Cobra Orco. I mean, that looks, if you look at the presentation, that looks like a textbook porphyry. Question is size and grade, obviously, and I mean, there's a possibility it's not a porphyry, but it's like everything lines up with it being one or two porphyry bodies. If Tech likes that and wants to drill that, there's a chance in hell that there's actually a Tech-sized deposit there. I think the market cap now for Condor is like 22 million CAD. So my point is, which I've said before, I mean, or I'm gonna get to that actually. ALTA Copper, I just saw that Fortescue was in that one. So that's obvious. I mean, that's a multi-billion-dollar company. Faraday Copper, I think I own it in the HODL portfolios a bit. Landin family and Pierre Lassonde. It's like, okay. Again, do I know that's going to be a success? No. What's the... I mean, these are the ones I really like. I mean, first of all, they have resources and stuff, and I think it's in Arizona, the US. But like, what's... Again, going back to alpha, how do you capture alpha? I mean, okay, these are investors, they're not literally the operators or whatever, but it's like, okay, I bet they have a say in what goes on and all that. It's like, how do you play a case like this, really, when you have, let's say, superb backing, superb management team, and a resource in the ground? Do you know it's going to work? No, but I would say that the no-brainer approach to playing, stories like that is just buy and hold until it works out very well or it doesn't. That's it. I mean, that's basically what the Landins and Pierre are doing, because they can't really trade it. So I mean, they might sell out one day, of course. I mean, something might happen, but it's like, okay, if you see them selling, you should get out. But otherwise, it's like, I mean, you get quality. That's what I'm saying, and that time is probably your friend. Hannon Metals, I really like Michael Hudson, who's the CEO of both Hannon Metals. Well, I think he's the CEO of Hannon, or is the chairman. Anyway, it's one of his companies, and he's obviously with Mawson Gold and SXG. Southern Cross Gold down in Australia. I really like the guy. He's backed by, Pierre Lassonde. Hannon Metals got Tech and Jogmec on different projects as well. Plenty of exploration potential. One of those, as most of the other ones, high risk, high reward. Arizona Sonoran, I think that's probably the most advanced one. I forgot who's in that. I think it's Rio Tinto. Not 100% sure. I forgot when I did this list. Amaroq Resources, they have JV with Freeport and Boliden. Again, is there a chance in hell? Absolutely. Otherwise, these guys wouldn't be there. Orquest Exploration, some microcapper. They seem to have a JV with Freeport. I couldn't find a lot of the information. But still, it's like, I mean, seriously, if if I was like, oh, I'm gonna make a copper-focused junior portfolio. I mean, you could go obviously to the even more de-risked ones. There are more, resources out there, whatever. But I'm a sucker for, to get some alpha as well. But if you think about most of these, like, okay, high risk, high reward, we're like, I mean, if they hit something really good, then we're talking like, I don't know, 10, 20 baggers plus, and that's from, one significant discovery. Brixton Metals, I mean, yeah, 10, 20 bagger. I mean, if they put in a screamer hole, or, Ivanhoe Mines makes a discovery and they get, what is it, 30% or something, or 25, yeah, it could be worth quite a lot. KDK Copper, if they go over the threshold, they make a discovery or something more, and it's like, oh, now it looks like they actually have a porphyry camp that's going to be a mine, and add a solid copper sentiment, whatever. I mean, I would say a lot of these have like 10, 20, 30 bagger potential, and that's potential. Each one of them might have a, I don't know, it obviously depends, but let's say it's like 10% chance, and maybe it's actually 20% chance, or even 30% chance in some cases. So if you think about that, it's like, okay, if I 10, 20, or 30% chance to get like a 10 bagger plus, I mean, those bets are ridiculously good, and obviously it could go way higher than that. Imagine if some of these made like a true tier 1 discovery, and we go into a hot copper market. I mean, it's like, take Brixton, that would be 10 baggers, 500 million. 20 baggers, $1 billion. Let's say it's a tier 1 discovery that could, I don't know, billions of dollars. But again, the chance of success, I don't know, but like even a 10%, probably a good bet. So it's like, and any one of these high risk, high reward stories, if you put equal amount of money in each one of these, I mean, any one of them could theoretically pay for all the others. So I mean, if I again was a copper bull, I didn't know much about copper, and I wanted to do the no-brainer lazy road approach, I would probably, if I had a discipline to not check the portfolio and try to trade all the time, I would just buy a whole basket of copper juniors I would think are cheap to begin with third-party validation, because obviously a copper explorer could trade at the same market caps of some of these, but you don't have third-party validation, so at face value they look to be, they have the same value as some of these, and that might make you think they're cheap, because hey, this is selling for $30 million and the other one is selling for $30 million. Then they're both equally cheap. Obviously that's not the case. It's what are you getting for that 30 million? But if you have third-party validation, and these are big boys most of the time, that's like minimum $1 billion deposits. And this is in a, right now it's a pretty crappy sentiment environment for copper juniors as well. But it's like, no, I mean, if we went into a time machine, kind of like with my, gambler portfolio, if I put equal amount of money in each of these, maybe I should do a thing like that as well, like the copper hodl portfolio. My guess is in 5 years you're going to be up a lot. That's my guess, without any trading. Nickel PGM, I just added this, but like, yeah, I mean, Magna, in my opinion, no-brainer. Maybe the cheapest junior I know of any commodity. Is that a guaranteed, like, multi-bagger to a 10-bagger? No, nothing's guaranteed, but it's like, it's pretty much the most de-risked one that I own, I think. The best possible team for the task, and yeah, I think it looks cheap. Stillwater Critical Minerals, Glencore, backers, Ivanhoe Mines, Exploration, Geology. So it's like, again, you don't need to be a rocket scientist to figure out that, hey, does Stillwater Critical Minerals have potential, long-term potential? Yeah, because Glencore would probably not bother taking the time to write the check, I was going to say, They didn't think it had potential, and I don't think they would get Ivanhoe people if they thought it was a pipe dream to find something akin to what they have down in South Africa. Then we have Altamira recently put out news. Altamira Gold. Altamira Gold reports first real results from follow-up drilling at intrusive hosted Maria Bonita Gold Discovery Cardero project. You can read the drill result, the news release yourselves, but like hole 13 returned 139.4 meters of 0.5 grams per ton from surface, including this 15 returned 120 meters of 0.5 from 69 meters depth, including 38.5 meters of 0.9. I mean, what sticks out, I was going to say, look at how consistent it is. Like 139 meters of 0.5. Within that's 28 meters of 0.9. And here you have 120 meters of 0.5. And including that is 38.5 meters of 0.9. That's pretty remarkable. I mean, kinda, what I think Quinton has said about Snowline, that it's like grade control would be so boring because it's so nicely homogeneously mineralized, kinda. Hole 10 returned 106 meters of 0.4, including and most of these start from surface or almost from surface, including 31.2 meters of 0.6. Yada yada. 46 holes completed confirmed association of thick intervals of gold mineralization with subcropping coarse porphyry rhyolite intrusive. This same host rock intersected in prior drilling is now shown to be mineralized over approximately 250 meters east-west by 200 meters north-south. The wild gold mineralization intervals indicate an extensive mineralizing event within which the higher grades are related to the intensity of stockwork quartz veining. And that's kind of the same thing with Snowline that they put out early on. The vein density. How many of these I was going to say countless small veins could they see in the core, and that turned out to be pretty good, or you get an idea if it's going to be higher or low grade, the amount of veins. The well-developed stockwork lies within a broader envelope of alteration characterized by pervasive potassic chlorite and cerussite zones with varying degrees of quartz veining and lower grade gold mineralization. Drilling continues and logging and analysis of a further 13 holes is underway. I actually think I read that there were like 15 holes awaited. The drill program will also include HQ diameter metallurgical drill holes to provide samples to optimize the excellent gold recoveries achieved in leach test work today. So the Cardero project is this project. This was actually Dapiaka's project, which I first got into Altamira for. And that's still, that is not dead. That is, we can look at the presentation later. They're still keeping that. I don't think they've done any work, but that's a lot of artisanal gold workings there. So it's like, and I think they drilled like 13 holes, and we can look at it later. But it's a huge project. You can see the scale bar here. And that's Brazil for you. And this Maria Bonita lies within Cardero, and that's also where they have 700,000 ounces already. And down here you have the Santa Elena project where they've outlined like 3-4 porphyry targets, I think. So this is really a multi-asset junior with like district scale land packages. And I was going to say that I was hoping for, these are the previous scout drill holes. 69 meters 1 gram, 50 meters 1 gram, 45 meters 1.4, 50 meters 1.1, and 71 meters of 0.6, 55 meters of 1, 59 meters of 0.3. What I find interesting is like, here, for example, they're drilled almost next to one another. These one, the deeper hole and the shallow hole, and here you have 139 meters of 0.5, yes, including a 0.9, but here you have 69 meters of 1 gram per ton starting at surface. This is the potassic altered rock, the red signals potassic alteration. Quinton said in a recent, the most recent Crescat presentation that he it's so potassically altered that he believes this is signaling that it's a big system. Exactly why that is, I don't know. I guess, a lot of fluids, a lot of heat, whatever. That is intensely potassically altered. So it, could be a very large event, let's say. And here you have the cross section. New tab. And this, I really like this slide. You can kind of see where they hit, different units. And the funny things, like down here in hole 10, all of a sudden, here it's pretty barren. I think this is 0.2 to 0.3, and all of a sudden it's like starts to hit 3 gram. And that's obviously wide open. Here you have 0.3 to 0.5. Here you have 50 to 1 gram per ton, and it's like, again, wide open. Here you have a thicker one, and here it starts to kick off. This looks to have been folded and mutilated, etc., etc. So it's like good grades, especially for a product like this. Here, for example, you have 1 to 1.5, and all of a sudden, you have some barren rock, some barren intrusion within that. But it's like this is still quite, shallowly drilled. I don't know exactly how long this hole is, but let's say 200 meters, something like that. That's not a lot. That's not a lot at all. And of course here it's, okay, this is a later FP dike. But here, it starts at surface. Imagine the strip ratio just on this stuff here. It's almost non-existent. From this angle at least. And yeah, okay. And we also get a message from the CEO. The results from holes 10, 13, and 15 are extremely encouraging, showing extensive drill lengths of gold mineralization within the same intrusive rocks in the phase 1 drill program. These holes are holes also bottom in mineralization. These holes have extended the mineralization gold-bearing intrusive host rock to the west, north, south, and to depth relative to the first round drill results. So it's like we've expanded the system. I personally was hoping to see, let's say, instead of the broad 0.5 intervals, I wished it would be like points, 6 to 8 or something. And Quinton made that comment as well, that he would like to see like 0.7, 0.8. But the thing is, and I'm not a mining engineer, but the metallurgy seems to be really good. And obviously the CEO is excited about this, but it's like, yes, of course, he's the CEO, so we could kind of expect that. But then I also look at, okay, Paracatu is, I think, the largest gold mine in Brazil, owned by Kinross. I think it's called, where's that? Paracatu is a long life cornerstone operation located, I think they call it, somewhere they call it a tier 1 mine. Somewhere on this. Anyway, so you can see it's like cost of sales, US $909 per ounce. That's good actually. That's good. Okay, open pit, huge production obviously. It's a massive. But let's look at, the resources, etc. It's like proven and probable mineral reserves, 0.4 grams per ton. Mineral reserve estimated at $1,200 per gold. Mineral reserves are here. For the reserves, the cutoff is 0.16 to 0.24 grams per ton. In the mineral resources, the cutoff grade, meaning this, like, okay, when the grade goes down to that level, that's kind of, I mean, see it as a break-even level, 0.11 to 0.19. Yes, obviously they have some serious economies of scale, but still, I mean, they're mining 0.4, and if we have, 0.5 to 1 gram per ton, which is like no stripping ratio, easy metallurgy, clean ore, whatever, it's like today this is probably a mine, or I should say, I think if they found a large resource of 0.5, I mean, at today's gold price, I'm pretty sure it would make quite a bit of money. That's my guess, simply because the extremely low, potentially extremely low strip ratio, and simple metallurgy. And capex, I don't think would be huge either. And maybe start off with some saprolite potential that would be like free digging, might have a cutoff of what 1.1 or 0.1 grams per ton maybe. I mean this is very forward looking. Honestly, it's like I wished we would seen higher grades right off the bat, but Quinton also said that he believes that I mean the point is, this is still very much early days, and I think that's why I mean the market hasn't been that enthusiastic, but at the same time, it's like when the results came, yeah, we had a 10% dip, but in this sector, that's almost strength right now. So I think again that I think almost no real chance of success was priced in, and so not much changed, because obviously, even if I wanted that, okay, I wanted the 130 meter intervals to grade like 0.7, 0.8, let's say. It's not pricing in that kind of an outcome, because that would probably be very economic. Like these 1 gram per ton hits would probably be very economic. So if you found, starting at surface, like 0.7 to 1 gram and found 1 million ounces of that's, and this is total speculation in a sense, but like I would think that that's a legit mine. That's a really good mine, thanks to the extremely low strip ratio and infrastructure in the area, plus simple metallurgy. So that was kind of at least interesting to see. And we've also seen visible gold in a section of one hole, and since the conventional 50-gram fire assays report in this press release use only a very small sample, we've decided to re-assay the samples using 1 kilogram screen fire assay samples to utilize 20 times the sample weight and therefore reduce the sampling risk, leading to more repeatable and representative results. Oh, here it says 15 holes pending. Yeah, okay, cyanide heap leach in case of saproline, cyanide vat leach in the case of the hard rock, which will help to make this a low-cost mining operation and give the company the optionality to begin mining with a very low capex from the easily extractable near-surface material. So this is kind of the antithesis, I would say, of a typical porphyry exploration, where you drill, 500 to a kilometer deep holes, and you need something, kind of enormous to make it work, because the capex will be so huge. In Altamira's case, it's possible that they could relatively cheap prove up a resource that could become a mine with pretty low capex. I mean, maybe really low capex. I'm not talking like 300 million or anything like that. So that is, I think, the really interesting. And of course, they have 700,000 ounces of gold already, which would, I mean, if they put up a mine operation, they would probably the mineral resource was estimated using a gold price of 1,500, so that's conservative. The two deposits are connected by the main public road that passes through the area, and both targets sit alongside a hydroelectric power transmission line from the power station located 15 kilometers from the project. So I mean, Cajueiro has a lot of things going for it, including a storing resource of at least 700,000 ounces. plus whatever they found at Maria Bonita. And like G Mining, now they recently acquired Reunion today actually, but they have a market cap of, I don't know, a lot. They built a mine from what was supposedly, I think in eyes of the market, a very marginal deposit. But they, based on that, and I don't think they're fully in production yet, but I think their market cap, of course, I mean, it might change with the acquisition. Okay, it's sold off on the acquisition, but like 900 million. So Tocasinho, which I think the market, I mean, I don't remember exactly what it was priced at, but I mean, add dilution, whatever. So I think Tocasinho was kind of a unloved project, but G Mining Ventures turned that into a $1 billion developer. I find that very interesting. And I think I've heard that G Mining had to build like 80 kilometers of power lines and stuff, because it's not anywhere near, I think, in such a favorable infrastructure position as Altamira, or started off that way at least. So this is what I find interesting. We know the market cap 26.5 million. They might have, I don't know, 3-4 million in cash left from Aura Minerals who cash them up. And yeah, so I mean, I think, I mean, there's a few things going on here. I mean, Quinton believes that it might the juicer stuff. He believes there's higher grade areas within this, and you don't need too much to make I think a mineable deposit here. I just did some quick numbers. I should actually upgrade them a bit. Like, okay, I just used their dimensions. I used 250 meters depth. If you have 200 by 250 meters depth, and we just assume the average grade is 0.5, that's 500,000 ounces already. Well, let's say, you know, 200 depth, whatever, it's like 0.4 million ounces. I don't think that's, I mean, it's obviously not a tier 1 deposit, but I don't think that's anything to sneeze at if we think that this is still very much early days. That's like a rectangle like this, and we have no idea how big the system is. We don't know how deep it goes to depth. We don't know what's going to happen. I mean, here that the grade is kicking up for a while. What's happening over here? What's happening down, you know, down plunge or whatever here? What happens to that in that direction? So it's like, this is very much early days, and they're not even drilling deep yet. That is, I guess, my takeaway. And Quinton thinks, okay, the potassic alteration, and they state that as well in the news release, that they believe, okay, what they're seeing, how the rocks are looking, that this is probably a, what's the word they used? Extensive mineralizing event within which the high grades are related to blah blah blah, and that's basically what Quinton said as well. And what's interesting here is, okay, so they think there might be a nugget effect going on, and I might be wrong, but I think that these scout holes that were like, okay, maybe, you know, 50 to 70 meters down, I mean, that's how long they were. I think they had wider diameter, so they took bigger samples. And it just happens to be that, you know, a bunch of these hit like 50 meters of 1 gram, and then you put what I think are narrower, how do you say it, like drill diameter with smaller sample size, and all of a sudden you see lower, I'm not gonna, I don't know that's the reason, but you know what I'm saying. It's like there might be a nugget effect going on. that the grade perhaps is underreported in the more narrower diamond drill holes than whatever they use to drill these scout holes. And I think I think there's a few clues, because like, okay, if you somewhat randomly drill like a bunch of 50 to 70 meter holes, and you come up with a bunch of them grading 1 grams per ton, and then you also, not random, but you do a grid drilling, and pretty much no one is showing 1 grams per ton near surface. So either you're, I guess, very lucky with the first hole and somewhat unlucky with the other holes, or there might be some systemic underreporting at play when they use the narrower, what I think are more narrow, lower diameter drilling. I hope you get what I'm saying. So I'm open to the possibility that maybe all the holes from this phase 2, the ones we've seen so far, and maybe the rest of, the 15 holes that are coming as well, might be potentially underreporting the actual grade. And maybe the scout holes showed a clearer picture of what some of the stuff here is actually grades. And again, keep in mind that we've only drilled this area out of this magnetic structure, and I mean only almost 1 quartile of this gold in soil contour has been drilled, and it's only been drilled to depths of like 200 meters, and not even every hole. I think the plan was to drill like 120. So think about how much in terms of surface area there's left to drill, and then add the third dimension. I mean, what's happening down here? What's happening down here? Will this pass through here and hit something? How long will this continue to run, etc., etc.? So when you add like how much have they actually tested so far, this in a planar, or how do you say it? You know what I mean, from top down. I mean, this is the only area out of this whole thing that's been drilled. Well, they put 2 holes here as well, actually. But there's a lot of left. I mean, majority is untested, and it certainly is not closed off at depth, because some of the higher grades start to kick up at depth. So I think we're basically very early days still, and this has a shot. I mean, if Quinton's hunch is right, that there's going to be a even higher grades, and maybe there's a nugget effect going on or whatever. And maybe, and that's hard to translate, I guess, to us retail, but it's like maybe the threshold for success here is much lower than we think. And actually, if, let's say, they drill up 500,000 ounces or something like that at 0.5, 0.6 grams per ton or something, combine that with the central deposit, and you might have a mine here, like an Aura Minerals type mine, because they're mining a bunch of, I think 1 to 1.5 million ounce deposit and making money on it in Brazil. So this might actually be something that is worth something, even though it's like, now it's obviously not a tier 1 project or even a tier 2 project. But maybe, just maybe, at face value, if this is a, let's say a tier 3 deposit, that might actually make, some good bank. And the threshold to develop it might be very low. Capex might be very low, and especially if they find more saprolite. But that's hard to translate, I think, to people. I think this might be one of those stories that's like, okay, maybe it's, unless, drill a screamer or whatever, it's like, maybe it's going to be a bit, I don't know, unloved, let's say, by the retail sector, who's used to, in Canada you have to drill whatever the grade for it to work. But it's like, okay, yeah, that's in Canada. This is Brazil, where they're mining 0.3, 0.4 stuff profitable with a cash cost of like $990 or something. Again, a much higher scale, obviously. But let's not also forget that the market cap is supposed to capture. Here you see the infrastructure picture. Here's the Kajero project, and I mean we're drilling here right now. Here's where you have 700,000 ounces, and I think this is the deposit is wide open in basically every direction. They have switched to Maria Bonita since, well, this big old thing showed up. This is undrilled as far as I know. This is untested. This is untested. This is untested. And yeah, I mean this was done at what, 1500, I think. Here's the Maria Bonita, and this is what I'm talking about. It's like, okay, not every hole, but like a bunch of them graded like 1 gram per ton. And this is obviously, wide open still. Of course we have 15 more holes to go. And I think, it sounds like Michael is very enthusiastic about the, tonnage, let's say. They're adding, even though it's not maybe the grades that we hope to see at least yet, but it's like, it's sure is adding tonnage. And maybe if there's a nugget effect, let's theoretically, let's say we bump it by 0.1, 0.15 grams per ton. That might be a game changer for a project like this, given that, again, it's like the mineralization starts at surface, easy metallurgy, good infrastructure. They already have 700,000 ounces over at the central deposit. Here's Labras Gold. Santa Elena, here's where they have their porphyry targets. Apiacas. And look at these scales, like that's a 40 kilometer scale bar. Here you have the alluvial gold workings shown, and this is Apiacas. I don't know what compare that. This is the Mutum target. These are all the targets. Again, look at the scale. That's like a district. And they have done, how many drills did they hold? 13 holes within a 40 kilometer long district of alluvial gold workings running all through it. And they hit actually 30 meters of 0.52, 131. So it's like there's a lot of smoke there. Obviously that's like low grade material, but still, Jesus. You 13 drill holes into a 40 kilometer long project. Yeah, early days, but obviously Maria Bonita is like the low hanging fruit, because they're just, making the system bigger with every drill hole so far, basically. I guess my point is that what is my point? The point is, I guess that this is a process. Anything could happen. We really don't know. This could, first of all, it could work at these grades. I'm not ruling that out. We might need higher grades. Depends on who you ask. If they did a PEA on this, if one would front run, like, okay, let's say they drill 15 more holes and more holes after that, and we come up with like 0.5, 0.6 and some higher grade zones within that, and nobody cares, and all of a sudden they put out a PEA in whenever, and it's like, hey, this is whatever, like I'm just absolutely speculating big time here. It's like 500,000 to a million ounces of 0.5, 0.6, and it's actually worth, I don't know, 300-400 million with good IRR because it's so low capex, whatever. It's like, yeah, would people care then? Yes, I think so. Do I know that's gonna happen? Absolutely not. I just go back to the market cap for all their projects and targets and the 700,000 ounces. So it's like it's kind of hard to say it's expensive, not cheap, when they're at least proving up the size of the system already. And again, I mean, if you would get true economies of scale, this is apparently a tier 1 mine for Kinross. Maybe you need several hundred million tons to have it as a tier 1 mine, but still. And a cutoff grade of like 0.11 to 0.24. And obviously these holes are higher grade, most of them, than that. Yeah, so that's about it. And as always, I have no idea what the future will hold for any of these companies, but it's like, yeah, I think we're early days still in Altamira. That's what I think, and I would like to see they work APIACas as well, plus Maria Bonita, plus I would like to see the Santa Elena porphyry targets get drilled. I mean, just the value of having their a land package like they do, which with such obvious I mean, in terms of golden smoke, I don't think there's a lot of projects that have more smoke than well, I guess especially APIACas. Yeah, so about that, of course, the proof would be in the pudding. Again, fast forward, I don't know, 12 months, and maybe, well, maybe they found a higher grade zone. Maybe it's already a no-brainer discovery. This is this is going to be a mine, etc. Or maybe they drill up a bunch of, again, 0.5, 0.6, maybe prove up tens of millions of tons at least, or who knows, maybe more than that. And then there's one day a PEA on it, and it's like, yeah, this is actually a valuable project, and depending on the size, obviously, you could do it for relatively low capex as well, and make good money at whatever the gold price is. And theoretically then, also that, okay, you have the saprolite potential, which should be really, really high margin gold. So let's say you find 50,000 ounces of saprolite with like very high margin. Could they maybe self-fund their way into production? I don't know, but it's a possibility, I think. And that's something you can't say with the copper porphyry exploration story. So that's what I kind of like with some of the gold stories. That's like, even though a success might not, you might not require to have a tier 1 deposit, because there's probably a bunch of tier 3 copper projects out there that's never gonna get built because they have a capex of like $1 billion and are not that big or not that good or whatever. It's like there's no way anybody's gonna finance that, and there's no way a junior can. But if you have some of these stories, and the same I guess goes for Cabral Gold, which got Osisko Gold royalties into it, I think that's partly because of their saprolite potential. And again, like I think I talked about recently, you had, what did you have? You had that Dundee, the head honcho at Dundee, who said they were looking for 500,000 ounces of saprolite gold at Reunion, ended up finding a 5 million ounce deposit underneath it, and now it just merged with G Mining Ventures. So it's like, I like the idea where it's like the threshold of success is pretty low, and then all the, let's say, or all the surprise to the upside is kind of for free, whatever. Unlike, I mean, Snowland was kind of the opposite of that, where it's like, okay, we need 8 million ounces to make it work, but it looks like it's going to be 8 million ounces, and voila, it's probably more than 8 million ounces. But that's a very high threshold for success. This here, I think, might be a very low threshold for success, and there's still the optionality that this might be much better than it looks right now. I guess that's a fair assessment of Maria Bonita. Thanks for listening. Consider me biased. I own shares of all companies I mentioned, I think, but not all copper companies I mentioned. Some are banner sponsors as well. I have no idea really which of my juniors will do well and which won't do well. That's up for the future. All we can do is make good bets, or try to make good bets, and then the chips will fall where they will. And we're gonna make money in some, lose money in some, but obviously in order to make a lot of money in some, we have to hold some companies for a long time, because a 10 bagger might take 3 years to become a 10 bagger. Might take it 6 months to become a 1 bagger, and then you have to hold it until it's a 2 bagger and 3 bagger and 4 bagger and 5 bagger and 6 bagger. All of a sudden 3 years later it's paid for all the ones that didn't go well. But if you day trade everything, or if you try to trade every move, odds are you're gonna fail anyway. And if you hold stores short period, if you would hold all of these on a 1 year basis, it's like, who knows what's gonna happen. Give all of these stories a 3 year period, where, let's say, again theoretically, you don't sell. Obviously, if one of these makes a discovery, has some success, and they can build on that, they will have built more in 3 years than in 1 year. So in 1 year, maybe even if 2 are successful and the rest go down 50%, you might be like even Steven, or it might be down. But it's like, fast forward 2 years more, those 2 successes turns out to be like 20-30 baggers, and they more than paid for all the other ones. That's my point. Because returns can take a long time, but if you obviously fail quickly with something, the punishment can be immediate. Those are my last 2 cents. Thanks for listening. Have a great day, and consider me biased, and this is not investing advice.